Good morning. It's Jeffrey Christian, CPM Group. I'm pre-recording this for release on Friday, the 19th of January. I'll be traveling on that day. On Tuesday, I made a video about silver above ground refined inventories. And it prompted some interesting comments by people who clearly misunderstood certain aspects of the silver market. Now, I think most viewers of CPM Group's videos understand this stuff, but some people don't. And in looking at these comments, it occurred to me that there were some very important aspects of the silver market that were worth talking about. So that's what I'm going to do. The title here is Silver Investors Buy High and Sell Low. And that's a weird thing, but it's true. One of the comments from Deep Thinking Economics was available. Mine production is not available, so take that off the chart. Deep Thinking Economics maybe misunderstood or listened for what he thought I would say. Mining is not in our above ground inventories data. Mining is the source of all silver that is has ever been produced. Even secondary supply is secondary recovery of silver that was once mined. It's important to know how much silver has been mined, and it's also important to estimate how much is still around of that silver that's mined in recoverable form. So deep thinking, we don't include mining and mine output in our estimates of above ground refined bullion holdings, inventories. So we can't really take it out of there. Our estimate is that 60 billion ounces of silver have been mined over the course of history, and that 5.5 billion of that is in above ground refined bullion and coin holdings. More on that as we go. It's just a minor point. Silver Nova said, yes, we don't mind selling some silver when the actual price gets factored in. People aren't holding it just to hand out. And that's a very important point. And it's also a point that a lot of people, including CPM Group, sometimes misunderstand. We think investors are going to sell silver when the price is high. And many investors do. I've talked about my uncle who bought a lot of silver at $1 and $1.20 back in the days when the U.S. Treasury had 3 billion ounces of silver, and it was using that in silver coins, and it was backing silver certificates. And he bought that silver at about $1. And then in January, in the first quarter of 1980, when the price of silver had spiked to $50 for about 5 minutes, and averaged about $35 in the first quarter of 1980, he actually found someone who would sell him a house and he could pay for it in silver at the quarterly average price of $35 an ounce. So some investors are smart and they buy low and they sell high. And a lot of investors used to do that. But what we've seen since 1980 is quite different. And it's very interesting and important to know. Investors in the olden days bought low and sold high. This is that chart of surpluses and deficits, net additions we call them, and net withdrawals from above ground inventories. And as I pointed out in our video on Tuesday, about 80% of those above ground inventories are held by investors. But if you look at the sales, the net additions of silver, the purchases or net additions of silver by investors over time, and the net sales and withdrawals by investors, what you find is a big change after 1979. Between 1960 and 1970, investors bought 2.2 billion ounces of silver. The price averaged $1.42 during that time. Actually, the price was $1.29 or lower for a big part of that decade. Now, of that 2.2 billion ounces, 1.6 billion of it came from U.S. Treasury holdings, which, as I said, was about 3 billion ounces in the beginning of the 40s. If you exclude the Treasury sales, either through coinage or through direct bullion sales, you saw investors buy an additional 578 million ounces of silver over the course of that decade. Because the Treasury was trying to extricate itself from using silver in the currency system, and people were buying and hoarding old silver coins that have silver in them, the Treasury wound up minting hundreds of millions of ounces of silver coins, because as they were putting nickels, dimes, and quarters, and silver dollars and silver half dollars into circulation, people were hoarding them for their silver content. And it caused problems with a lack of coinage in the U.S. economy. So the Treasury wound up using hundreds of millions of ounces of silver to keep the coinage in market supplied. And it also sold hundreds of millions of ounces of silver in bullion form in order to try to keep the price below $1.29, which was the price at which you could melt silver coinage down and refine the silver out of it and have refined silver. 2.2 billion ounces of silver purchased at an $1.42 average price, and most of it was actually $1.29 or lower. Now, from 1971 to 1979, investors sold about 172 million ounces. That's those net withdrawals that you see in the first net withdrawal period, 1971 to 1979. The price was $3.43 on average, 142% higher than the price in the previous decade. And those investors that sold 172 million ounces did very well. Other investors obviously held on to, 2 billion ounces of silver. Some of those investors sold 1980, including my uncle. But then you saw a shift in the way investors behaved. The price of silver went from $3.43, $5, to $50. And a lot of investors started thinking, oh, the price has gone to $50. It came back down. It averaged something like $16 an ounce or $20 an ounce in 1980. But investors had seen the price rise tenfold. They listened to certain promoters who said, oh, it's going back to $50, and they kept buying. And you can see in this chart, this is 1980. Investors bought a tremendous amount of silver at $16, $20, $50 an ounce. The people who were selling at $35 an ounce, other people were buying, right? They continued to buy large amounts of silver, but over the course of the 80s, it dwindled down as they became disenchanted, and they said, you know what, maybe the price isn't going back to $50. And over that period, 1980 to 1989, the price actually averaged $8.94. And you can see the red line, the price fell throughout that period of time. And over that period of time, investors bought less and less silver on a net basis, and some investors were selling. But on average and in total, investors bought 1 billion ounces of silver over the course of the period 1980 to 1989, and they paid $8.94. By 1990, the disenchantment with silver grew worse, and investors started selling. And between 1990 and 2005, investors sold 1.7 billion ounces of silver. Okay? Obviously, they had bought 1 billion ounces in the previous decade, and they had bought 2 billion ounces on a net basis in the period 1960 through 1979. So they had a lot of silver, and they sold a lot, 1.7 billion ounces. And, at the beginning of that period in 1990, 1991, we were saying investors own billions of ounces of silver, And silver producers didn't want to hear that. They wanted to say, oh, the world's running out of silver. And the Club of Rome had said, oh, yeah, we're running out of silver. And they were wrong. We're running out of silver to mine. Wrong there. Running out of silver in above ground refined inventories. Wrong there too. Investors sold 1.7 million ounces of silver from 1990 through 2005 at an average price during that period of $5 an ounce. So if they had bought in the previous decade, on average price basis, they would have lost 43% of what they had paid for when they bought high in the 1980s and sold low in the 1990s. All it changed again in 2006. And between 2006 and last year, investors have bought another 1.8 million ounces of silver at an average price over that period of $20 an ounce, 290% higher than the price in the previous period in which investors were selling. Investors since 1980 have bought high and sold low. Some investors are savvy. Some investors are value investors. I own a lot of silver. One person estimated that I was in like the top 10% of silver investors in terms of the amount of silver I own. The price I paid for that silver is less than $5 an ounce on average. Right? Some investors are value investors. They buy low and they sell high. Some investors are savvy investors. They see $50 in January of 1980 or April of 2011, and they sell. We have clients who sold in April 2011, and they bought it back within a year at a fraction of the price that they had sold it at. But on average, investors buy high and sell low. Now, going back to that question, at what price will investors sell? Well, we all like to think that investors will sell if the price rises, and some investors will. But as I've just said, you look at the collective behavior, and investors have been since 1980, over the last 43 years, buying high and selling low. The common thinking is in sharp contrast to the collective behavior of investors. Now, scrap sales are a separate issue. I'm talking about refined bullion bars and coins. Scrap sales tend to surge with higher prices, although sometimes they don't. They did not in 2020 because governments were paying support programs around the world to help investors during the deep recession that we had. Income and economic conditions affect trends in silver scrap sales. Now, you may never sell, but many investors don't, silver and gold, but your heirs and your estates will. There are millions of ounces of silver sold by heirs and estates every year. And we get calls from people who say, my father believed all these conspiracies. He was waiting for JFK to come back from that Greek isle with Elvis, and he's dead now, and I have all this silver. Can you help me sell it and get a decent price for it? Because we have, taxes to pay, etc. You may not sell. You may be a true believer and hold that stuff in your cold, dead hands, but your estates and your heirs will. Something to pay attention to. And it happens. It happens in the market. Just background, pay attention to the 1.6 billion ounces of silver sold by the U.S. Treasury from 1960 through 1971. Some of it was sold in the form of coinage that they minted and put into circulation. And some of it was sold through bullion form. The next question. Yes. This fellow says you should reduce your figures of estimated above ground refined inventories because, for example, I've been buying silver. The silver you've been buying, unless you've been using it or drinking it or, throwing it in the garbage, the silver you've been buying are above ground refined inventories. You and I are the holders of those above ground refined bullion coins and bars in the inventories. So it's not that my figures are too high. It's that you don't understand what refined above ground refined inventories are. And by the way, I have been talking about above ground refined inventories in bullion bars and coin form. You interpreted it as available silver. And it is available. You may say, I'll never sell that, but your heirs and your children and your widow, they may have different views. It is available. And it's available at strange prices. Some people will only sell their inventories when the price is high. Others will sell it when it's low. So, and this is the data. Again, more than 80% of the silver in above ground refined inventories is in the hands of investors in bar form and in coin form. That's all I have for today. Again, we will be having an open forum for our clients on February 1st. We will be doing our silver facts and fantasies. I've just been talking about some of the facts and fantasies, and possibly we'll be getting back into that. That also is a Q&A, if I recall correctly. We've been doing it since 2021 during the lockdown, and in lieu of silver receptions at the PDAC. We will be doing our 20th annual silver reception at the Prospectors and Developers Association of Canada annual conference on Sunday, March 3rd. And then we have our yearbooks, and we are working on a silver seminar. The working title of that seminar is CPM's Real Silver Seminar, because we want to focus on the real silver market, not that phantasmagorical one where the price is going to go to $3,000. You can go to our website. You can get free reads, see videos, download reports. You can buy reports. You can read about the kinds of consulting services that we give you. You can pass this video link on to your heirs so that when you're dead, they can know where to call to get help in selling their silver at a good price. You can write to us at info@cpmgroup.com and say, I'd like to buy some of your research, or I'd like to buy some of your consulting time, or maybe you can help me make better decisions on my investments in gold, silver, platinum, commodities in general. In the meantime, I'll see you next week. Take care of yourself. Take care of those around you. Try to do something good for the world, and increase, if you need to, your ability to comprehend what people are saying and writing. Take care.